The words asset allocation may be familiar to you, and that is, I think, in the industry is first off about how much risk versus guarantee that you have, because there are literally thousands and thousands of investment choices. You have the spectrum of extremely risky stocks and other investments, and on the other end of the spectrum you have certificates of deposit or a savings account. Typically a client doesn't want all of their money at high risk, but typically a client doesn't want all their money sitting in a savings account. So for all of us, there's a blend of investments that the industry typically is referring to as asset allocation. Now, we also take an additional approach to asset allocation from a tax-efficient standpoint. For example, you may put a lot of time and research into what investments you want to own. If you have a current advisor, that advisor may spend a lot of time and effort determining what investments you should own. However, from a tax-efficient standpoint, you may have 401ks, you may have traditional IRAs, Roth IRAs. You may also have after-tax, what are called non-qualified brokerage accounts. And so at our firm, taking a tax-efficient approach, it's not just about the investments you own, but what account you choose to own those investments in that can make a significant difference in your tax efficiency. Because keep in mind, it's not just what you make, it's what you're able to keep that you can spend on your lifestyle or spend at the grocery store. And there are significant tax advantages to owning your riskier assets inside your Roth IRA or in your non-qualified account as opposed to your traditional IRA. We call this the three types of money, and it is very effective with our clients, and not just pursuing a good rate of return, but making sure that they get to retain or keep as much of that return net of taxes.